So as it's going up, I do like a trickle buy. I trickle buy the SBIT. So I'm like, okay, SBIT, well, I see you're going down in value, so I'm going to buy you because you're basically a vessel for me that'll allow me to profit off the downfall of Bitcoin. It's pretty easy to predict the downfall of Bitcoin because anytime it goes up to like 100,000 or 120 or whatever, eventually a massive sell-off happens because a lot of people that get into it don't really have confidence in it. The other one that I do is the SCHX, mainly because it's an easy one to swing trade because of the low price markup. And honestly, it's basically, I call it the S&P 500. It's basically the S&P 500 plus like 200 extra large cap companies that decided to meld into the index. And I feel safe enough with that type of index to buy that kind of index on the dip because I love large cap companies. There's usually a reason that they're graded so high by the market typically. But you still want to be a little diversified when you're swing trading any sort of product. So ETFs are great to swing trade because it's not just one company. There's several companies that make up the whole damn index. So those are the three ones I swing trade. I basically swing trade 2 leveraged ETFs that allow me to, like I said, profit off the downfall of Bitcoin. And then one that allows me to, if a bear market happens, I buy into the bear market, and then as it goes back up, I kind of trickle sell a little bit on the S&P 500-esque ETF that I have. I call it the S&P 500-esque because, like I said, it's S&P 500 and then like 200 extra motherfucking companies that they add to it. And yeah, that's pretty much it. As long as I'm buying whatever I'm buying at the current market value, and even then, I really don't truly care what the market says something is. If I know that what I'm getting into is naturally valuable and has real earnings, all that good stuff, I'm pretty much set. I'm happy about it. But yeah, so it's let's see, S&P 500, 200. So yeah, those are the only three ETFs, and I got hundreds of motherfucking ETFs in my portfolio. It's insane. And I usually just buy them a share at a time. I'll just buy 1 share of this ETF if I know it's good, if I know it has good holdings in it, if it's backed by like Vanguard or Spider or BlackRock or whatever, that sort of thing. Two main concepts, by the way, for this channel. Two big things that this channel talks about. Income is the outcome. I cannot stress this enough. I love writing this down because I crystallizes it even more in my bloody soul. Income is the outcome. That's so, like I said, how do I meet the income is the outcome criteria?